New jobless claims rise 3,000 to 265,000, but the 4-week moving average is at a 15-year low. Seasonally adjusted 265,000 new claims was much better than the investing.com forecast of 280,000. The 4-week moving average at 283 is a new interim low, the lowest in 15 years. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:44 a.m. Central Time, and I'm recording this in preparation for market day, May the 8th, 2015. Full disclaimers are at the end of the video. But be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive into the overnight action and see just where we might be going into the open. Now, first of all, it's important to note that while I was referring to the weekly numbers, the monthly numbers will be coming out in about 45 minutes based on the last closed entire month. And that's one of the big four macroeconomic reports, and that certainly could be a big mover. And it just speaks to, when we look at these weekly numbers, we look at the monthly numbers, how much attention we as traders, investors, and then of course the broader media pay to this. And there is good cause for this, because the trends and employment say an awful lot about the overall health of the economy. And it's very difficult for markets to continue to grow if the employment situation is running in a contrary direction. So we'll see this morning as the pre-market opens up, do these current bullish numbers from the overnight hold up and continue, but they could totally reverse based on what that number is. So at this point, we would say the four broad market indices are all basically slightly bullish, all running about 0.25% up. Nothing too substantial, and frankly not expected. Most of the time you go relatively sideways in front of a large number, and certainly the monthly unemployment or employment report would be considered one of those. You also have crude oil up about 0.39%. You have the euro down about 0.36%. Bonds up 0.2%, and gold up about 1/3%. Overseas, big action coming out of China. China up 2.28%. Hong Kong up over 1%. Japan up about 0.5%. Germany up about 0.4%. The United Kingdom, of course, which wakes this morning with the understanding of which party has won and some certainty there, and the markets have responded up almost 1.7%. In terms of macroeconomic reports for today in the United States, there really is only one that will be talked about, and that is the non-farm employment change. And then that's really about it. So once you get past that into the cash open, it should be pretty much clear sailing with respect to macroeconomic reports. In terms of our current volatility conditions, our headlines, short-term VIX 15.59, obviously nice bullish action yesterday, so that certainly ebbed. And you look at the IV percentiles, all very moderate, 24, 26, 34, 34 across the four indices. Nothing really to note there. Also nothing really to note in terms of standard deviation moves. We had that little burst of action in about 3 out of 4 trading sessions, but now been followed by a couple quiet days. Now, of course, today could be a basic yawner, and it could also be a huge trend day, very much related to what happens with that monthly report. In terms of our regular market opinions, daily report, we are currently in this phase 5 breaking of support levels. Remember, a couple days ago we broke down through both diagonal and horizontal support. We've had a little bit of a bounce off that, but the question, of course, now is it just a bounce, and will we get a higher, or will we get a lower high and then roll over into a lower low, or was this recent action just kind of a poke through the bottom of the range, and then we now, take off and create a new interim bullish trend? So questions to be answered only will be answered by price action in the days to come, but today could be that day that helps define some of that. You are in quite a bit of warning with portfolio investor posture as market and correction by the IBD status. Further, the GMI index, it's only a 1 out of 6. The buy signal could flip to a sell signal literally in one trading session. And that is the lowest GMI index I have seen since I started following that particular index. Active trader market posture, we have a first day weak bull, but that was in front of this monthly employment report. So I'm keeping a lot of caution about that. Technically, market posture says that we're in a weak bull and that it would be actually okay to make short-term and intermediate-term bullish trades. I'm still staying with the no new short-term and no new intermediate-term bullish trades until we get past this employment report, which will be after this broadcast, obviously. But obviously some mixed things. I mean, this first day, we've seen first day weak bulls get trounced quite a bit of late, and also these numbers are not entirely encouraging. NASDAQ, of course, is below a 50, so a very weak bull. And then Russell, of course, is still very severely bearish. So this is not the kind of picture that mixed with market and correction and GMI indexes of 1 out of 6 that make you want to get all excited about putting on new position. Indeed, our hedge warning status remains threshold level 2. So a lot of caution should be applied. We still have volatility-based warnings, market in decline, sharp increase warnings. We still have the daily squeeze on the VIX, and that, of course, could easily fire to the short side. Doesn't take much, and certainly not much more than a poor monthly employment report to be able to set up the stage for something much worse. New highs, new lows yesterday actually was much better, 334 on the plus side. In terms of the intermarket risk aversion indicators, you still had the situation there with only one firing as risk off. We've had this kind of, I'll call it, strange situation with bonds. Normally you think of bonds as being safe haven, especially those like TLT, where TLT would be going up when the market's going down, but obviously correlations that are typically expected have not been holding true in recent market action. Bonds did have a big day yesterday, probably the biggest day in quite some time, and yet at the same time, in general, bonds have been going down with the market, and certainly even on big down days have not been responding with accumulation patterns. Option income strategies, you still have the situation where the VIX is inside the acceptable window, but this market and correction situation exists, and when you have that, big down days just tend to run right over option premium selling, option income strategies. So unless you're doing something that's big monthly kind of setups, you're likely going to have a lot of adjustments. So just be aware and be very careful with your strategy selection. Certainly monthly strategies can work in what has been largely a ranging market. Less likely you're going to have weekly rut calendars or something like that. That could be very difficult in this current market condition. Cover call strategies, neutral, calling for a 2-to-1 distribution between in the money and out of the money. Put selling with the market in correction, quite suspect. for those market conditions. So look for bottoming patterns and consider scaling in. Those are all three the same opinions as what we had yesterday. In terms of sector specific, a lot of red here, and you know what? Those weren't updated, so don't pay any attention to those. And from an industry standpoint, obviously we're in market and correction, so you're just looking at your watch list. So doing research and so forth, looking for where you might start scaling in once you get better market conditions. Retail, internet, healthcare, railroads, biotech, all leading the group. Biotech moving up into the top 5, which is kind of interesting. Been a tough ride lately in biotech. Okay, that should be enough for today. As always, if you like what you're getting from us, we appreciate in turn investing in us by liking us on YouTube. More information about the Falcon Global products, including our portfolio and options trading chat room membership, can be found at this website. Performance matters, we get that, and we're very transparent with our performance. And disclaimers, as always, just hit the pause button if you need more time to review the disclaimers. And we'll see you back here on Monday morning before the market opens with the market preview. Thank you.